Good morning, everyone, and welcome to the Fiber Broadband Association's Fiber for Breakfast. We're now in our sixth episode of 2025. Before we kick off, I'd like to thank Wesco, the platinum sponsor for Fiber for Breakfast. Well, it's been a busy couple of weeks in Washington, and I don't expect the pace to slow down anytime soon. The great news is that last week, the Senate Commerce, Science, and Transportation Committee held confirmation hearings for Howard Lutnick's nomination to serve as U.S. Secretary of Commerce. In this hearing, Mr. Lutnick pledged to ensure BEAD funding is solely used for broadband infrastructure and to work swiftly with the states to deploy broadband using all kinds of technologies such as fiber, satellite, and wireless. The hearing underscored bipartisan concerns over the pace of broadband deployment, and Lutnick is focused on BEAD's efficiency and expedited execution. The committee is holding an executive session this morning to approve his nomination, and it's possible he could be confirmed by the end of the week. Further, the highly talented Ariel Roth has been nominated by President Trump to lead NTIA, and we look forward to working with her and underscoring the importance of fiber broadband as it relates to jobs and the economy. The confirmations of the Commerce Secretary and the Assistant Secretary is really key to getting the BEAD program back on track, as our mission to ensure every American is connected reliable, high-speed broadband is paramount. We're now then less than a week away from our first regional Fiber Connect workshop in San Antonio, Texas, next week on Tuesday, February 11th. Registration for this event continues to go crazy, and San Antonio will break all records on our regional events. So we're getting off to an amazing start. But if you haven't registered, please go register ASAP on our website, because we might have to close the event due to capacity. And then on Wednesday, the day after the San Antonio event, we're going to be heading up to Austin to meet with the state legislature. A lot is going on in Texas, and it's a really important state with $3.3 billion of BEAD funding. And then after San Antonio, we're going to be in Philadelphia on March. Fiber Day, I have to say, to celebrate the Super Bowl victory for those who care. Fiber Day in the Hill in April. Our Fiber Connect 2025 conference in Nashville is June 1st to 4th. We'll be in Anchorage in July, Toronto in August, Spokane in September, Scottsdale in October, Kansas City in November, and then our premier member meeting will be in Palm Springs this year, December 8th and 9th. That brings us today's Fiber for Breakfast session with Peter Supino, the Wall Street Senior Analyst and Managing Director of Wolfe Research. He's going to be discussing the broadband market outlook and key trends. Before I formally introduce today's guest, I'd like to introduce David Norris from our team, who's going to walk us through some housekeeping items.
Thank you very much, Gary, and good morning to everyone who's joined us today. We appreciate it. Before I go over a few logistics, we'd like to once again thank our platinum sponsor, Fiber for Breakfast, Wesco. Now, please keep in mind, all participants are in listen-only mode today. To ask a question, please type it into the question box located within the control panel on the side of your screen. We will host a Q&A session with our panelists at the end of today's presentation. This presentation is also being recorded and will be available on FBA's website within 24 to 48 hours, and you can find that recording in the Events tab under the Fiber for Breakfast drop-down option. Finally, at the conclusion of today's presentation, you will be prompted to complete a brief one-question survey. If you could take a moment to do so, we really appreciate the input. And with that, I will pass things back over to Gary to get us started. Gary?
Thanks, Dave, and good morning. Gary Bolton, President and CEO of the Fiber Broadband Association. Last week on Fiber for Breakfast, our guest was Dr. Jennifer Kent, the Vice President of Research at Parks Associates, who discussed the smart home in 2025 outlooks and opportunity. And Jennifer shared with us her latest research that showed that during the past decade, the average number of connected devices at home has doubled, while the smart home device ownership has gone up fivefold. And the smart home devices have really crossed the chasm from early adopters now being fully in the mainstream market. So if you missed that session, you can go to our website and watch the replay. Today, our guest is Peter Supino, the Wall Street Senior Analyst and Managing Director at Wolfe Research, who's going to be discussing the broadband market outlooks and key trends. Peter is a Managing Director and Senior Analyst leading Wolfe Research Media, Entertainment, and Cable Telecom team. Peter joined Wolfe Research in 2022 from Bernstein, where he was a Managing Director and Senior Equity Research Analyst for 3 years. Clients polled for institutional investors 2024. All-American Research Team ranked Peter number 3 in cable and telecom and number 4 in media, with both rankings rising. Prior to Bernstein, Peter worked at Passport Capital as a global hedge fund, where he was the director of research, sector portfolio manager, and senior analyst for 10 years. He began his career at Allen & Company, LLC, where he became vice president. In 1998, Peter received his bachelor's in history from Williams, and he, for the moment, lives in Grosse Pointe, Michigan, on his way to sunny California. So Peter, welcome. And for our audience, please type in your questions and we'll work those into the discussion. So it's really great to have you. I love to, see the amazing headlines you put out, especially Sunday nights. But, we appreciate all your research and key trends. Can you, in addition to your colorful headlines, can you start with kind of your overall view and kind of what you're seeing some key trends in the broadband market?
Yeah, I'd love to. Excuse me. And thanks for the generous introduction and for the chance to speak with your audience. I'll apologize for the Spartan background and perhaps echoey audio. I'm in the process of a move out, as you alluded to, but not distracted. Anyway, our observations of the broadband market for the last few months have been a little bit controversial. We published a note in November saying that the strength that was observed in the third quarter cable and telco broadband, publicly traded broadband company results risked being illusory. It risked being temporary, that we advise that clients not extrapolate the strength that was seen in the third quarter. And last week's reports by the cable companies seem to validate that caution. It's interesting, in such a stable business in which customers generally just pay their bills every month and the operators increase the price every year and the cash flows tend to go up over time. It's always surprising to us how volatile results can be in net adds quarter to quarter, but more so in the last couple of years. And that's because the rate of change in the industry has picked up. It's no longer, a monopoly in 2/3 of the country, and that's partially because of many of the members of your organization on this call today have been expanding their networks. And this residential broadband today is a duopoly in 2/3 of the country. We think that number is heading towards 75 or 80% over 5 years. And fixed wireless, as well as satellite, I don't want to completely discount LEO satellite, albeit capacity constrained and peripheral, have presented a third, in aggregate, sort of a third capacity constrained player. And so we think of the market more and more as a triopoly or even a 4-player market supply side, which is just so dramatically different than it was a few years ago. And in that context, there are a couple of saturation issues that we're watching, which came up in the third quarter. The first is the question of penetration excluding rural sort of subsidized BEAD passings or RDOF passings. Based on our industry model, we see penetration in the 93 to 94% range, which is to say that percentage of the country that is passed by broadband has bought the product. And we think that's really, really high for a service which, while essential for most households, is not quite literally essential, because you can get internet access through your mobile phone. And given that there are households making hard decisions about milk and warmth, it makes sense there'd be some households that would not afford a residential broadband connection over the long run. So unfortunately, we see penetration as pretty full, and coinciding with that observation, we've seen the the cable companies' broadband subscriber growth not keeping up with the number of homes that they pass. So historically, you could see the obvious relationship between the expansion of cable footprints and the expansion of their subs. And what we're seeing now is as they expand their footprints, they're not growing subs, and that makes their businesses more capital intensive. So a lot of moving parts. I'll wrap up these sort of introductory comments by saying that there's our industry model shows net adds for the whole industry, fiber, DSL, cable, the entire net add pool for home broadband in 2025 appears set to come in below 2 million. We think it was around 2.2 million in 2024 and around 2.5 million in 2023. That's a really bad trend for the incumbents who are changing the least and have the most to lose. It makes life tougher for everybody. And so as we look at 25 and we see the weak results that the cable companies just reported, we're wondering if the problem is not that fiber and fixed wireless are competing harder than they were 3 months ago. In fact, we don't think that's what's happening. We think what's happening is that the industry is the net ad pool rather is shrinking. The growth of the industry is decelerating, and that's felt most acutely for the incumbents.
So that's really interesting. So if we look at, I mean, and maybe this is where you're going, but you had, some of your notes, research notes, you had said that, like for instance, AT&T, where we have fiber, we win. And then you came back later and you had a note from T-Mobile saying, where they have fiber, we win. So can you explain a little bit of those two notes?
Thanks for making me smile. That was fun to come up with. The AT&T has been saying for about a year now, publicly and with more specificity than ever before, that they have a higher share of mobile where they have fiber. They said it for the first time last summer, and they said where we have fiber, we win. And then on the last earnings call, they put numbers to it. They said they've got a 40% share of mobility in their fiber footprint. And that compares to, last I checked, about a 28% share of postpaid phone or mobility nationally. T-Mobile, at the same time, has just responded to AT&T's statements by saying that they're gaining share where they have fiber and where they don't have fiber. And obviously, T-Mobile has very little fiber nationally. And so what they're really saying is that in places where AT&T has fiber, T-Mobile is still growing at a good rate. And it makes sense to me. If you're a consumer and you look freshly at the mobile market or the fiber market for that matter, the best product in the market is fiber, and the best value in the mobile market is T-Mobile. And we always think about sales in telecom as being segmented. And what I mean is that there are some customers that do things for one reason, and other groups of customers that are not motivated by that. They do things for another reason. And for the segment of customers whose mobile decision is likely to be pulled by a preference for fiber, AT&T is going to win that business. But there's another segment that looks at those purchases independently, or whose home broadband business is not in play for whatever reason. And they're probably going to choose T-Mobile incrementally because that's the best value in postpaid mobile, simply based on price and the price you pay for the amount of gigabytes you get. So that's how I see them being able to say the same thing at the same time. And of course, the loser in that calculation is the third telco who in a given market, is neither the fiber operator nor the best value.
So when we look at fiber to the home expansion, so I think the takeaway is you need fiber to win, but it's not fiber enough is not going to win today. You have to have a competitive mobile offering as well, and to beat T-Mobile, it takes more than just fiber. But when we look at, you were talking about a shrinking demand curve on the broadband subscribers. So if fiber wins today, and we have 88 million homes now passed with fiber, that means about 71 million homes are left to go. And if we see that there's another 77 million of redundant homes, because every operator to be competitive has to put fiber, so you're going to see some redundant homes in key markets. So that's 71, 88. We're about 150 million homes left to pass. So how do you see that playing into the timeline of market saturation? So the overall, if you look at the overall market, we might start saturating, but from any particular provider, as we're seeing AT&T commit to 50 million homes now with the Verizon Frontier merger, 25 million homes passed with fiber, and really the big fiber race. How does that all playing out for looking at provider by providers net subscriber growth?
Well, redirect me if I don't directly answer your question, but my thinking right now is that the first thing to focus on is the size of the individual telcos' incumbent phone company footprints, and that's because those are the places where the telcos can most efficiently get permits and labor and rights of way and retail marketing advantages to build fiber. And AT&T and Verizon have mostly built fiber in those footprints, especially Verizon, but AT&T as well. And AT&T's incumbent footprint is about 60 something million homes, and Verizon's before factoring in Frontier is in the 30s. We think the limitation of that Verizon incumbent footprint has put a ceiling on Verizon's fiber opportunity, which they got concerned about given some of the things that you and I talked about a few minutes ago. And that ceiling and the desire to have a higher ceiling is the impetus for buying Frontier. T-Mobile doesn't have an incumbent footprint, and so they have been, doing joint ventures with entrepreneurial companies who can build within somebody else's incumbent footprint effectively. And we think that's a smart strategy for them. They're on course to get to 13 million homes based on the deals that they have. Seems ambitious, candidly. The speed at which they say they can roll this stuff out seems to me like stretches the upper boundary of what I can believe, but they're a highly credible company, and so I give them the benefit of the doubt. And then that all adds up to, if you factor in that plus private companies plus Lumen, you get to something like 100 million intended fiber homes passed, maybe even a little more over the next 5 years. We don't think all of those homes will be built by all those companies. In other words, we think there's some overlapping assumptions, and that the end result will be 10 million or so lower than the sum of all the public targets. And the number in my head is that our industry model has 85 or 90 million fiber homes passed in 2030.
Really? I mean, we're at 88 million now, but some of those are redundant.
Yeah.
Hey, let's take a look at, to me, in November, right after the election, when Stanky held its investor day, AT&T's investor day, and he outlined their plan to get to 50 million homes passed by the end of 2029. To me, that was a watershed event because, that was a pretty, to me, big commitment. And, being able to outline, from a fiber industry perspective, that when he, because we get a lot of this rhetoric about, is it too expensive to pull fiber, and what's the best value for taxpayers and so forth, and to have AT&T come out and say we're fiber's and advancing our business case by 2 years. It's super accretive to our business. We're going to put our private investment. We got 29 million homes passed now. We're going to get to 45 million. We're going to take Gigapower and get to the next 50 million homes. To me, that sent a huge signal to the new administration and to the market on fiber as a great investment. What was your reaction to that investor day, and kind of how do you see that other operators responding to that?
I can tell you that AT&T's targets were at the upper end of what Wall Street was expecting. And that, I agree with you, is really bullish signal about their expected returns on capital, and not just from selling fiber, but from the impact of selling fiber on their whole business. Our math that we've detailed in a report we wrote about 6 months ago called the Fiber Primer is that AT&T and others who efficiently deploy fiber for 1,200 a home pass or something, and who can get 40+% penetration rates, earn really nice returns on capital from selling that product alone, and I'm sure many of your members have direct experience with those calculations, the government is probably quite aware of, or not probably, certainly quite aware of the energy that AT&T and others are putting into fiber, and happy with it because it's stimulating for the economy. It's pro-competitive. It's infrastructure. Who doesn't like infrastructure? Right now, as you're aware, fiber is losing on one front, which is kind of mind share of the BEAD subsidy because of who's talking to the president and the type of infrastructure that they have. So I'm not sure about how the government, what the next headlines from the government about fiber might be, but certainly AT&T and Verizon and T-Mo and even the cable companies with their build-outs are all signaling that fiber is the right answer for the country in places that don't require subsidies.
I spent the last 2 weeks working my way through the Hill and the different agencies, NTI included, and I think the headlines are misleading because what I was hearing from very right-wing folks on the Hill and so forth was what really wasn't about pushing other technologies. It was about market forces. And so when you let the market decide, fiber wins, and we've seen that, right? I mean, John Sankey is kind of the leading candidate for that. But hold on a second. Sorry, can you still hear me?
I can hear you, yeah.
Okay, sorry, something happened here.
No worries.
But anyway, so when the leading candidates are market forces, and then when we talk to all the state broadband offices, of course they're going to deploy fiber because they're, as you mentioned, they have to build out critical infrastructure. And so while there might be extremely wealthy people in very interesting positions that are close to the president, I don't think there's going to be an over rotation. I mean, I definitely see that the states, they want to make sure that this is a one-time, investment, that they want to be able to have critical infrastructure that's not only going to deliver ultra-fast broadband connectivity, but provide the critical infrastructure for mobile phones and being able to. I'm thinking
an interesting unanswered question on this topic is, what does Elon Musk say or Jeff Bezos say to the argument that when public subsidies pay for LEO infrastructure, they're buying 5-year infrastructure? And how do you deploy a public subsidy to an asset with a 5-year life? I don't understand the answer. I love the idea that Starlink could serve rural customers for a much lower cost per passing in terms of initial cash outlay. But it seems to me that the capital has to be recycled much more quickly. And I just don't know how you factor that into the public kind of assessment of the cost and benefit.
Yeah, I don't think that any of the state broadband offices understand what you would be getting, because it's the infrastructure is already there. I mean, the satellites are in the sky, and so you're not going to influence the number, the capacity, and the capacity is limited. Today, like for instance, the largest constellation, Starlink, and they can support 2 million subscribers today. They have 1.4 million as of the end of last year, and that's growing. So if you start adding, all the RVs and yachts and American Airlines and United and government things, your ability to serve BEAD location is pretty limited. The other issue is you can only serve one location per square mile to be able to meet that. And so you're talking about very rural, low density. So I don't think that's kind of more of an anomaly, an outliner, kind of a red herring. But I think the bigger, let's take Louisiana, for example. They deployed of their BEAD allocation, they awarded 95.4% to fiber. And then the last 4%, half went to fixed wireless, and then the other half they said, okay, no one bid on this, so we're going to earmark that for LEO. And so it didn't really take any market share from fiber. It took it from fixed wireless, which is kind of a shame because fixed wireless really gets fiber all the way to line of sight within a home. And when you put that fiber infrastructure in, like we saw in Northeast Louisiana, now that they're putting fiber infrastructure, Meta is going to be putting an AI data center in Northeast Louisiana. So your ability to really have a meaningful impact, economic development, jobs, education, healthcare, is about putting that infrastructure in place.
The recently there was a presentation from Starlink about its intentions in terms of rocket ships and payload per rocket ship and gigabytes per payload that made me wonder if that 2 million target is going to rise a lot, but that's outside of my expertise.
Yeah, we modeled it over to the end of the decade. So today it's network constrained by how many satellites you can get in the sky, and then going from the V1.5 to V2 and the capacity of each satellite. But quickly it runs into spectrum issues, and so even if FCC gives SpaceX or others all the spectrum that they want, it's still limited. So even at the end of the decade, you're looking at 5.5 million subscribers total in the U.S. So anyway, it's kind of a red herring, and I think what the states are looking for is, number one is how do they get the most benefit out of the investment from critical infrastructure, and then two, how do they get everybody connected.
You bet.
Let's switch over to, before we run out of time, I want to talk about what's your take on the Verizon Frontier merger? So that gets them to 25 million homes passed, and then there's 1,400 fiber providers, new fiber providers coming into the market every day. What's your view, kind of by the end of the decade, when we start seeing a lot of market consolidation, and what are you going to see from that?
So Verizon today, the incumbent footprint or the phone company footprint is about 32 million homes. Frontier brings them 15, takes their total footprint into the high 40s, and they've publicly said that they'd like to extend fiber to about 40 million homes, which is a very aggressive target over time. And as you pointed out, today's Frontier footprint plus today's Verizon footprint gets them about 25 million, which means they've got another 15 or so million to build over the long run. Should be great for CapEx and for technicians and for consumers. Looking out at the rest of the industry, the other big change factor is T-Mobile, which is going to build over 10 million incremental homes by 2030. And T-Mobile's done 3 significant joint ventures to build up those targets. I think it's clear that Verizon's doesn't have much capacity after buying Frontier to do much more M&A. Of course, they're a big company and can do small bolt-ons. But if you're talking about assets with the handful of assets that pass millions of homes that remain privately held, Verizon's probably not the one to pay for those. AT&T could. They're very financially flexible. They're going to be using free cash flow to buy back stock starting in the second quarter of this year. So that stock buyback is funded and includes a 10 billion budget separately for M&A. And that 10 billion budget for M&A over the next 3 years, as part of their public guidance, could be used for spectrum. It could be used for fiber. We're open-minded. I'm sure that they would be happy to buy a fiber asset if it were not in their incumbent footprint and expanded their long-term opportunity. T-Mobile, same logic. We think they're very interested in acquisitions, and so it should be a great time to be a seller of a fiber asset for the next 5 years. And I noticed a friend of mine at Ziply recently found a home for what they're doing, and I think there'll be more of that.
Yeah, well, the Canadians aren't real happy with the CRTC unbundling their networks, so you'll see some like Bell Canada and others looking more into the U.S. But hey, Peter, as always, it's great to see you. Good luck on your move to Marin County. You'll love it out there, and I really appreciate your research and your Sunday night notes. Gives me something to do late night Sunday nights. But again, thanks everybody for getting together. And next Wednesday, we're going to have the former FCC chairman, Ajit Pai, join me. He's also a partner at Searchlight Capital. He's going to talk about broadband priorities in the new administration, expanding access, speed, and equity. So you're not going to want to miss that. Ajit is full of a wealth of information. So thanks, everyone. Thanks again, Peter. We'll see you guys next Wednesday.
Thanks, Gary. Thanks, everybody.